Across Danone's streamlined business portfolio, the water division has been the weakest performer, especially through the recessionary quarters. Despite a slight recovery and better results for the division in the latest quarterly report, the division is rumored to be on the negotiating table again, but this time with an added specifications. Some Japanese players have been identified as potential suitors, although none of them has so far confirmed their interest. Over recent years, Danone has relevantly restructured its operation, and with an increased focus on its fresh dairy and baby nutritional business. Bottled water remains the group's core business. However, it has seen little investment in development over recent years. For example, the group has exited its Wahaha Joint Venture in China, which significantly impacted its global ranking. Within bottled water, the company also pursued a new strategy, focusing more on mineral natural water rather than just purified water in order to achieve higher profit margins. The two flagship brands of the division are Evian and Volvic. These combined, the two brands together generated about $2.9 billion sales in 2009. These two brands represents more, especially for French consumers, than bottled water. It also represents environmental protection conversation, especially in the area where they are sourced. There are a number of different scenarios of potential divestment for the group. For example, the way as Cadbury Schweppes spun off its beverages division in 2008 to an independently listed and managed Dr. Pepper Snapple group. And this approach of divestment would be a better one from the consumer sentiment point of view. Another way of potential divestment could be the sale of the emerging market brands independently. Both Nestlé and Danone, in the latest financial reports, they reported that the main source of growth was emerging markets, especially for the water division. Danone has a number of strong emerging markets labels, for example, Robust in China, Bonafont in Mexico, or Aqua in Indonesia. Divesting these brands independently would mean less operational impact for the group and would attract a wider range of buyers who are interested in specific geographic markets. Given the high-value brand assets in Danone's water portfolio, there could be a number of leading players interested in the division as potential buyers. However, the likes of Coca-Cola or PepsiCo, with their current size in the market, would face a strong competition and anti-monopoly issues in various markets. Over recent years, some leading Japanese players have been expanding very intensely via acquisition to international markets. For example, the Century purchased Orangina. Back in 2008, Otsuka acquired Almere in France for $1 billion, and Kirin has made an acquisition into the Australian market with the purchase of pure and natural beverages. All these acquisitions show their financial strength and their appetite to expand via acquisitions. Suntory would face competition issues in Europe, but it has other market gaps which could fill with some Danone assets, for example, in China. Kirin currently has a strong distribution partnership with Danone in Japan, and potentially this partnership could be expanded to cover wider geographic markets. The divestment of Danone's bottled water division is a possibility, and there are a number of scenarios available. For example, setting up an independently listed and managed holding company, or selling the whole division in one go, or sliced up geographically brand by brand, given there's a buyer with adequate financial capabilities. Either ways, the divestment would allow the company to strengthen its strategic focus of development of its powerful fresh dairy and infant nutrition business.